Yeah, Tuesday. What's up, everybody? Tuesday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. I hope everybody had a great Monday as we kicked off the week in style. We saw a little bit of a rally up in the markets, but then it reversed at some of our supply levels. So interesting to take a look at today. Remember a couple of things. First of all, tomorrow we're doing a live daily market commentary, 7 a.m. Central. So join us tomorrow morning live, 7 a.m. Central, youtube.com/tradersarmy, and we will be going live with our DMC tomorrow. So it gives you the chance to ask questions and participate with the group. Also, if you're a Traders Army member, don't forget today at 10 o'clock, Corey Lane is doing our live trade room on passive income and options setups. Okay, let's dive into today's market. So in the ES, we are down half a point this morning, but I will say that we had two supply levels up above us. Now, one was this 15-minute level, and looking at this 15-minute level, we approached this zone and immediately popped through it. It didn't hold at all, and I will say that level was typically when you have a 15-minute level that close to a 1 hour level, the 1 hour level is going to be the better choice, right? Because it's just a bigger zone. And so when we look at that level, that's the level that actually has held. So if you took a small stop out on this one, you've more than made up for it on the continuation of the move down from the 1 hour chart, as prices have fallen from that level and it's continued to drop. Now, if you took this 1, 2, 3, 4, 5, 6 candles later, you move your stop to break even, it's made a decent run down from that point. If you didn't catch that move down and you still want to get involved, I think that it still could be a valid area, but I don't love that we based below it after we moved away from it, so I'm actually gonna take that level off the chart, because I'm not sure what it's going to do from this point forward. So what I would say is looking at that 15-minute time period again, going back to that smaller level, here was really where the move picked up some momentum on the way down. European market opens, we trade all the way up to this top and then are unable to kind of pierce through that level. So let's see if we reverse at one of these areas for price to continue its move back down. Remember, our 4 hour is still technically in a 4 hour downward trend, and that hasn't really changed, right? Our 4 hour is still technically in a 4 hour downward trend, and we're seeing lower swing low, lower swing high. So if you wanted to just simply wait for us to get a potential breakdown on the hourly, that might be a way to get in, is on a breakdown on the hourly if we get some sort of basing in this region. I think that's probably the best bet and what I would make sense to look for. Next, the Russell, as we've been looking at the rut every day. So looking here at the rut, we had a confirmation short on this one, and notice price popped through there before giving us the confirmation entry. Now, it did wind up coming down out of that level and then popping through, but that's why we have confirmation entries. Remember, you don't enter the trade, you don't take any risk, and that was kind of what happened in this piece, is that we came close to it without getting filled, we switched to a confirmation, price popped through it, and so there should have been no loss on that position. Now we're looking at this area up here as a potential reversal point. If price makes it a bit higher, I think that could actually be a pretty good little trade, because it would be a little bit of a bull trap for a lot of traders that are getting long above the Globex high or yesterday's close, and it could be a bit of a trap. And I know yesterday we had a member who shot me a text message. Remember, you can always shoot us text messages if you have questions, asking about, we had a bullish engulfing candle on the daily chart. Right, so the question was, hey, we got a bullish engulfing candle on the daily chart. When can I get long? In reality, you can get long when we get above the daily candle's high. Your stop would go below the daily candle's low if you wanted to take the confirmation trade off of the bullish engulfing chart. Do understand that you've got this 15-minute supply to contend with, but if you're swing trading, you would be okay with that. My only fear with that is that we had a really, we've not had a strong bullish engulfing in a while, but my 4 hour trend is still down. And so I'm just being cautious of that in that piece. But price certainly could rally up from here. So if you're looking at a longer-term swing trade, it might be worth taking a look at to see, okay, do we pop above here? And is this the catalyst that causes it to get moving? All right, so moving over to the NASDAQ. if I take a look at the NQ. So in our NQ position, we rallied up to our NQ 15-minute level. And in this one, we got 1, 2, 3, 4, 5, 6 candles later, price had done basically nothing. So your idea is take your stop, move it to break even. If you did, then you're right about here. You then can switch it to a confirmation entry if you so choose, and have gotten short out of here. In reality, you've gotten very little movement from that level, so you've not missed out really on anything. I still think that the hourly level up above it is a better opportunity. And so with that hourly level still being up above it, I think that becomes the Globex bull trap. If people try to get long above a breakout here, we could have a little reversal. This is a wick over wick below a pivot low, which is a pretty standard setup that I like to see. So I'm going to keep that area in place. If you're so inclined, you may even take a breakdown out of this level here. If we're getting a bit of basing, there could be a really nice breakdown below here. Crude oil. So crude oil, we came close to our demand level. Didn't quite get in yesterday. Supply level up here. And so now we're just kind of hovering between zones in crude oil. So if I look at this level, I'm going to come to right here. This little 15-minute zone right there, I think, makes for a decent potential reversal. You've got 33.38 by 33.28. It's a 10-cent zone, 10-tick zone, excuse me. Use the proper terms. 10-tick zone where you've got a decent move away. It's not the best time of day. You might find that this level down here is a bit better. Oftentimes when I've got a level on top of a level like that where they're fairly close to each other, I will take this one as a confirmation. And then the lower one as a limit, because that allows me to play both levels with a little bit less risk. In the gold, yesterday we did bounce off of our 15-minute gold level. We got a very weak movement out of it, however. So I'm not going to use this level again. I'm going to remove that zone because we got such weak movement out of it. I think there's a chance that we can chop around sideways in here, but I don't see a breakout direction strong one way either way. I think in this case it's going to be best to wait for price to come into one of our levels, either basing below here or a reversal somewhere down here. You might get some decent basing right in here to get short. That would be the only real trade if that setup occurs. I'm going to remove that line for now, but keep an eye on that one for later in the day. In our bond and currency markets, we spoke yesterday about this little demand area in the ZN right here, and that price came close to it in the overnight. Last night was unable to get filled, and we've still moved away. So that level still exists. It's still there. This is setting up for a little bit of what I jokingly call a Batman cowl, which is usually a pretty decent opportunity for a sell-off. And so let's see if price sells off down into this 139.050 region, where I think you could get a little bit of a reversal in here. But for now, I don't see a strong trade either way. In the Aussie, we did have yesterday's Aussie level. We started basing here. We bounced off this level, started basing just before it, and then rallied up from it. It actually served as a nice support line. And then in the overnight, we didn't get clear basing in front of the level. We popped just below, and now we've got a potential reversal somewhere up in here. So what I'm going to do is remove this line and put a reversal trade right up in that region where we could see price turn a little bit later today. In the euro, we got a little bit of a rally off of our demand area yesterday. After that demand area hit, we popped up, chopped sideways, and now we've come back down through it. So, you certainly had enough time to take some money off the table. You saw that it wasn't moving your way. 6-candle rule comes into effect. Old demand becomes new supply, and I think there's a chance that we can now reverse off of this level and for price to trade a bit lower. Now, this wick here makes it a little bit less likely, a little bit harder to lean on because of that wick. And so I think you're better now just waiting to see if we break down from that region. There's also a little 15-minute level right up here where we could see a bit of a reversal. So keep an eye on that one today. In the Canadian dollar, we are still where we were yesterday. Potential breakout one way or the other in Canadian dollar, so not a whole lot to lean on in the Canadian dollar on this. Great British pound. So yesterday we spoke about the move down off of this level. Prices have continued to move down from that zone. I put some notes here for a member who'd sent us an email asking about the stop. Remember, when we place these stops, your stop has to go above the wick of the leg into a trade. You can't just go just outside the distal line. And so looking at it, as we head into today, we had a little bit of a reversal off of this zone. Prices are still coming down. Let's look for a breakdown below here. And then the Japanese yen, yesterday we did come into our demand area. It came down right to our stop. May or may not have stopped you out. If it didn't stop you out, then you certainly got 6 candled out. 1, 2, 3, 4, 5, 6 candles later, it told us to take our stop and move it. But now that sets up for a breakdown trade. Now we've set ourselves up for a pretty nice opportunity for a breakdown because of this price action. So look for a breakdown in the Japanese yen today below this level. So hopefully that makes sense to everybody. I look forward to seeing you tomorrow for our live daily market commentary. Remember, 7 o'clock tomorrow morning. I will, hope barring any technical issues, but I will talk to you soon. Have a great day. See you.